Good afternoon, participants in this CAFII webinar. My name is Keith Martin, Co-Executive Director of CAFII. We're just waiting for attendees to join the call, and we'll start the webinar in about 1 minute. Thank you. All right, well, thank you everyone for joining us today. I think we're ready to start the webinar. Good afternoon and welcome to this CAFII webinar on Canadian credit protection insurance consumers' digitization preferences and how they've been affected by the pandemic. My name is Keith Martin, and I am Co-Executive Director of the Canadian Association of Financial Institutions and Insurance, or CAFII. On behalf of myself and my Co-Executive Director colleague, Brendan Wicks, and the CAFII Board of Directors, thank you for joining our webinar today. We are delighted today to be joined by Lesli Martin, Vice President at Polera Strategic Insights, who will make a presentation on CAFII commissioned research on the digitization preferences of consumers. A 20-year research veteran, Lesli leads Polera's Consumer Insights and Financial Services divisions, as well as its health affairs and reputation specialty practices. With a client portfolio that encompasses every sector, she specializes in discovering the belief and motivational systems at the root of each relevant audience and illuminating the message themes that will provoke and inspire these target audiences, influencers, and stakeholders. Prior to joining Polera, Lesli was a senior researcher and account lead at Leger and Comscore and led research departments at Sears, Cosset, and Great Gulf Homes. She has authored research-based articles in peer-reviewed medical journals such as Healthcare Quarterly, and her research has appeared in many Canadian newspapers as well as in Marketing Magazine. Lesli holds a BA in Business Communication from Brock University. So today, the results of a recent CAFII commissioned research project carried out by Lesli Martin and her team at Polera Strategic Insights on Canadian credit protection insurance consumers' digitization preferences and how they've been affected by the pandemic are being shared with insurance regulators and policymakers from across Canada in advance of their public release. CAFII conducts consumer research regularly to understand the shifting preferences of consumers, to know what our members are doing right and what they can do better, and to get feedback from customers in relation to our members' performance on their fair treatment of customers' priority. CAFII is a not-for-profit association dedicated to the development of an open and flexible insurance marketplace. Our 15 members include the insurance arms of Canada's major banks and credit unions, along with their insurer business partners, which underwrite credit protection insurance and travel insurance. Just last week, our association welcomed its newest and 15th member, Canadian Tire Bank. This is the fourth offering in our 2021 series of webinars, which is focused primarily on issues related to life and health insurance policy and regulation in Canada. Now, today's webinar will be recorded and posted on our CAFII website in the near future. The presentation Lesli is making will also be posted to the website in English and in French. If you have any questions that you would like to pose to our panelists, to Lesli Martin, during the Q&A session, for which we have allocated 15 minutes during the concluding section of today's webinar, please send them to me as the host using the Q&A function of Zoom, and I will pose them on your behalf. Unless you specifically request in your question that you be identified as its source, I will post all questions on an anonymous basis. And just before we get underway, I would like to extend a special welcome to some VIP guest attendees. In addition to many representatives from our 15 CAFII member companies and our 10 associates, which supply essential services to our association and to our members, we have attendees today from allied industry associations such as the Canadian Life and Health Insurance Association, CLHIA, and the Travel Health Insurance Association, THIA, and from insurance and financial services regulators and policymakers from across Canada, including the Office of the Superintendent of Insurance, Government of Nova Scotia, Quebec's Autorité des marchés financiers, or the AMF, the Financial Services Regulatory Authority of Ontario, or FSRA, the Insurance Council of Manitoba, the Financial and Consumer Affairs Authority, Government of Saskatchewan, the Insurance Councils of Saskatchewan, the Alberta Insurance Council, the British Columbia Financial Services Authority, or BCFSA, and the Insurance Council of BC. Welcome to you all. Now let's jump right into the webinar. I'm going to turn the floor over to you, Lesli, to share the highlights of the research that you conducted. So over to you, Lesli.
Great, thank you. I will just share my screen. Okay, we will jump right in. First, a little bit about what we did. What we did was an online survey. It was conducted in March of this year, of 2021. We talked to just over 1,000 Canadians, and they fit into one of two groups. The first group was people who have credit protection insurance and who have obtained this insurance since the pandemic. And the date that we had the cutoff was April 2020. So anyone who had obtained their credit protection insurance since April 2020 was included in the study. If it was before then, they were not. We also talked to people who were likely to obtain a mortgage or a home equity line of credit in the next 2 years and felt it was likely that they would obtain credit protection insurance for that product when they got it. Another mention of methodological nature, we also did a study for credit protection insurance back in 2018. This is not a tracking study per se, but there were some areas that we wanted to see a difference. We thought it would really give us a clearer view on how the pandemic was changing things if we looked at what people were doing back in 2018 and versus what they're doing now. So where we do have that comparison, you will see it in the report. I'm not going to go too much into the details of the key findings because we're going to cover that when we go through the detailed findings, but just overall, we have seen that COVID-19 has changed the way people are conducting their banking. Well, some have continued to go into a branch and want that in-person contact for things like arranging loans and obtaining insurance. Most feel comfortable and are likely to use some of the virtual methods. Once the pandemic's over, consumers are reporting that they're still going to need help. They're not looking for a self-serve methodology that is just going to allow them to handle everything on their own. They're still going to want to have contact with a financial representative to help them navigate these transactions. However, it is split between those who will want to go back to the branch and those who will want to use a more virtual method. We also found that COVID-19 is encouraging Canadians to get insurance, and those who had obtained CPI were more likely to get different types of coverage like disability, critical illness, and job loss. So we're going to jump right in here to the findings. So when we asked, are you more likely to consider insurance products since COVID? 65% say yes, they are at least somewhat more likely to consider getting insurance. And we saw that sort of the proof is in the pudding on this one as well when we looked at the type of CPI coverage that people have. With life is still the most prevalent form of coverage, and it's gone down a little bit since the 2018 study, but not much. It's not a significant finding. However, we have seen an increase in those who have disability, critical illness, and particularly job loss insurance. So again, this is comparing it to the findings of 2018. Canadians are more thinking about insurance. They're more wanting to be covered for what could happen to them in this unprecedented time.
Leslie, I'm just going to jump in quickly. We're seeing the presentation very well, but I'm wondering if you might want to put it in presentation mode so that it.
Sometimes when I put it in presentation mode, it switches, but I will try. Oh, it worked. Great. Sometimes when I do that, it switches into a different screen and makes me very messy. I'm glad
Yes, well, it worked this time, so we're lucky.
Thank you. Okay. We also talk to these consumers to just get some attitudes, some agreements to some statements, some attitudes just about how they're feeling about the pandemic and what it's doing to their behaviors with financial transactions. Before I get into these findings, I just want to clarify that I'm saying financial transactions, but by that I don't mean day-to-day banking. I'm not talking about paying bills. I'm not talking about, transferring money. I'm talking about doing such things as arranging for loans or obtaining insurance. And we were very clear about this in the survey. So there's no respondent that is going to be thinking, oh, they just mean paying my bills. That's not what we're talking about here. We're very specific in each question that's what we're talking about. So
things that are a little more complicated, Leslie, basically.
Yes, exactly. Things that not just the day-to-day banking. In this graph, you'll see that the top bar is looking at the CPI holders. Those are the people who have already obtained CPI during the pandemic. The bottom bar is the future purchasers. So that's the people who have not gone through the process yet, but would be considering doing so in the future. Generally, people are saying that they are feeling more comfortable doing things online. And we're seeing this more by the people who've already done it, right? So the people who've gone through this process, they're saying, yep, this is okay, I can do this online. They prefer the convenience of conducting their financial transactions online. They're also feeling that the pandemic has changed the way they want to conduct these financial transactions in the future. And again, a little bit higher among those who've already gone through the process than those who have not. And we even found a large number of Canadians who say that they've upgraded their technology at home to allow them to do this more easily. So that is the feeling of, yes, we're good with moving online, doing things virtually. There is definitely a high comfort level and there's a movement. However, it's not absolute. So when we look at whether people want to go back to the branch, we had almost 2/3 saying that they look forward to going back to the branch and conducting their financial transactions in person. So
Can I ask you a question on that, Leslie, because it is a really interesting result. I mean, for me, this is saying that a hybrid model is essentially what will emerge, where it's not like one or the other is going to be the dominant one, and financial institutions will have to be comfortable offering the various ways in which consumers want to interact with them. Is that a fair interpretation?
Yes, and you'll see that as we continue through the report, that is definitely true. This idea of doing everything virtually and online, it's not what everybody wants. It has increased for sure, but there are some people who just are going to continue to want to do the way they've always done, and they're looking forward to actually going back to a branch, to seeing people, to be able to talk to people face to face.
Leslie, if I could just ask you about the first number, the 84% who say, since the pandemic, I am more comfortable conducting financial transactions online. I mean, that's a very high number of people who are feeling more comfortable. I know you do research with a variety of different sectors and industries. Is it your impression that this is consistent with what we're seeing in other sectors, or is it higher than you might have seen elsewhere?
No, it is consistent with what we're seeing in other sectors. The world has changed in a lot of ways, and people really are more comfortable doing things online, talking to people online. And even as we'll go into it a bit later, but you look at things like this, like Zoom calls. There's so many people that before this had never done a Zoom call in their life. Now that's how their primary way of not only doing financial transactions, but talking to their mom, right? Like everyone is doing these Zoom calls, and we are seeing this across the board, that the comfort level in doing so, as the pandemic has continued for now over a year, is really gone up. Great. We also asked specifically how comfortable consumers would feel using a number of different methods to obtain things like insurance or loans. And comfort in the technology aspects are quite high, really, when we look at it. And this is during COVID, like due to COVID. So we're talking about how likely are they to consider this now, and how comfortable are they to do this now, as opposed to before or after the pandemic is over. So we look at conducting transactions online, that's quite high. Talking to financial institution representatives over the phone, again, 2/3 feel comfortable with that. Video conferencing, as I said, it's gone up. Email is a little bit lower, and we see that with people wanting more, I say face-to-face, but virtual face-to-face, immediate. I mean, maybe that's the way to say it, immediate communication back and forth with a representative, which they wouldn't get through email, although comfort level is still quite high. And using a financial institution's mobile app, that's a bit lower, and we see that throughout the study as well. There's a little bit of hesitance towards using the mobile app. It's still quite high, there is still comfort in it, but it's just a little bit lower than what we see with some other ways of communicating. So we asked the consumers, if you're going to deal with your financial institution online, virtually, what do you need to have? What is important to you to feel comfortable in dealing with your financial institution in this way? Not surprisingly, consumers want everything. This is something we always find in research as well. You know, if you ask them what they want or what they expect, they do want a lot. So if we look at it a little bit closely, what we're really getting is that connection to someone. And that's the first one, easy to connect with a person to get my answers, to get answers to my questions in real time. That's very important at 93%, with more than half saying that's very important. They still want that connection. And if we skip down to the bottom, the ability to deal with one representative throughout the whole process, that's also important to 88%. So they don't want that, you know, every time if they have a question, they want to have one person, and they still want that personal connection, even if it's done virtually. It's very important to them that everything's in plain language and that it's easy to understand. Security, also very important. 65% say it's very important that the security and protection of their personal information is there. They want to make sure that they're safe. We also see that with having all forms of personal information shared only through a secure online portal, with 51% saying that's very important, 89% saying it's important. So those two, that idea of security, also very important to this group. And then if the other ones that are also maybe a little bit less important when you look at the very important numbers is the immediate online confirmation of transaction and the online tools and diagrams to help illustrate the product and the price information. There's still like 9 in 10 say it's important. So I'm not saying that it's not at all, but it's just a little bit lower in the priority list.
But Lesli, when I look at these numbers, it does indicate to me that consumers quite rightly have very high expectations and don't expect to need to deal with gaps.
No, they don't. They want it. They do want it all, and they do expect to have all of that. So they want that communication. They want their questions answered. They want to know everything is safe and secure, and they want to be able to understand the information that's being shared with them.
Do you think this is partly the sort of Amazon effect where, you know, companies like Amazon have set a new standard, especially in terms of the online experience, and consumers are transferring that to other sectors and expecting as good a quality in those other companies as they get from Amazon?
Yeah, exactly. It's exactly true. And we're also just finding that even beyond Amazon, everyone is using these capabilities more often, and they just want to be able to do what they did before, and that's really important to them. They want everything to be the same in terms of what they're getting, with the security, with the answers to their questions. They expect everything to be the same, whether it's virtual or in person.
Another insight I thought I gained from this finding is that those companies that have a physical distribution network and which are able to provide an excellent online experience actually have an advantage over pure online players, because it's clear consumers are saying they want an excellent online experience, but they also want the option of that physical visit or the physical branch personnel. So those who can offer both, I think, perhaps what the research is saying is that they have an advantage in the marketplace.
Definitely, because there are different consumers who want different things. So, you know, although there are a lot of people who don't want to go into a branch, there are some people who do. So the people that, the places that can offer both are really going to have the advantage because they can reach both types of consumers.
Leslie, before you continue, I just want to quickly remind participants in this webinar that we are encouraging you to ask questions. You can do so by clicking on the Q&A function of Zoom at the bottom of the Zoom screen, and the question will come to me and I'll pose it on your behalf. Sorry for the interruption, Leslie. Back to you.
No problem. We also asked their comfort with the various processes, the virtual processes, and how comfortable they would be specifically obtaining credit protection insurance or making a claim on their credit protection insurance. So this is specifically looking at this product. And again, the virtual aspects, people are feeling pretty comfortable with it at this point. Talking to a representative over the phone is great. Having the forms emailed for you to fill out, email back, that's still a high comfort. Having the forms on the financial institution's website, that works as well. People are comfortable with that. The virtual meeting platforms, you know, 82% of people who have CPI and 74% of those who are would consider getting it feel comfortable with that as well. And again, once we get to the mobile apps, as I said earlier, there's a little bit of hesitation there. And again, a little bit. It's not a big, you know, people won't use it. There's some people that have issues with mobile apps, and that's what we found in other research as well. There's just a bit of security in the minds of some people. I'm not saying it's really there, but in their mindset, they're worried about doing certain transactions using a mobile app, whether it means that because someone can hack into their network, or because what if they lose their phone, whatever. We've seen that in other situations where there's always a bit of hesitancy when we come to that.
Phones and websites have been around for a long time, right, Leslie? So there might be that newness element as well to the mobile app.
Yeah, exactly. So we asked people how they would do these transactions, whether it's, you know, arrange for loans or obtain insurance, how they're planning on doing this after COVID. So once the pandemic's over, everything's back to normal, now what? And what comes up on top is in person at a branch. So this is what I was saying. This is not the branches are going to be empty. That's not the way it's going to work, because there are a lot of people who still want to do that. However, if you look at the way they were doing these transactions before COVID, we see a decrease here. Those were the red numbers. The two red numbers are the in-person. The people who are going to do it in person at a branch or through a financial representative coming to my home, that's decreased. Where we're seeing the increases are the virtual methodologies. Talking to a financial representative over the phone, the video conferencing, that's gone up the most of the virtual methods is video conferencing. And again, as I said earlier, I think that's just a comfort level where people are doing that now, that they're used to it and they're seeing that they can have that same back and forth real-time conversation with someone without having to leave their home, without having to go to the branch. But overall, all the virtual methods are increasing. All the in-person, face-to-face methods are decreasing. However, there is still that group that's always going to want to go into person into the branch to do this type of work.
Yeah, so I would say, Leslie, that it's a trend line and it's emerging over time, but for a 12% drop to occur in the period of time that we're talking about, given how many millions and millions of transactions we're talking about, that is a very significant drop.
Yeah, for sure. For sure, there is going to be a change moving forward, definitely. We asked the people who had the different preferences their reasons, just to understand what is it that each one is offering. So the people who want the in-person meeting, it is primarily that this is just the way they want to do business. They prefer dealing with a person in person at 64%. I would want to speak to a knowledgeable representative at 59%. So those are the two main things. And even, speak to the knowledgeable representative. I've done some focus groups on a different financial topic, but some people just feel like they need that face-to-face to feel confident. Even although, a video conference is sort of a face-to-face, they just don't feel as confident in that methodology as they do if they are actually sitting down and talking to someone in the same room. We look at the phone, video, or email as a way of doing these transactions. The reason that they're looking at doing this is they don't want to meet in person due to COVID-19. And this question was specifically after the pandemic, but that is going to continue, right? Like, we've all been in self-isolation for so long that it's going to be a while, I think, before we are open and ready to go and meet in public again. There are some people who are still holding on to that uncomfortable feeling of actually going out and seeing someone face to face. So they prefer this other method for that reason. They also find it easier than traveling to a branch.
Lesli, if I could just ask you a question on that. We're seeing in the US these arenas that are packed and lockdowns that are completely eliminated. And in Ontario, on the other hand, there's still many restrictions. Do you see the difference as cultural between Canadians and Americans? And might some of that be showing up in these survey results?
Some of it perhaps. And as things, and when this was done in March, right, our survey was done in March before anything was opening up. But we have to keep in mind when we're looking at the sample sizes here, because we're looking at just the people who said they want to do it phone, video, or email. So I think that some of it can be cultural, but some of them is just personality and a personal preference. Although things are opening up and they're opening up in the States, they're starting to open up in Canada to a degree. And there are some people that are going to be taking advantage of that. There's not everyone, right? There are those people who are not going to be doing that, and I think of this even, in your personal life. You think about, the patios open this weekend. There were some people that were there on Friday, let's go to a patio. And there's other people who are saying, no way, heck, I'm going to a patio, I'm not ready yet. So we are going to see this moving forward. And this is going to continue for quite a while, where we're going to have those two different groups of people. When we looked at the web-based or mobile apps, the people who preferred to do it that way, they found it was more convenient to do it like this. And these are also the people that are more self-serve. So they just want to go in, they wanted to handle it all themselves. They also thought it was easier to travel to a branch. They didn't want to meet in person due to COVID. It was less of meaningful to these people, but this is also people who are looking to do it themselves rather than actually having any kind of back and forth with the representative. So looking at specifically CPI, credit protection insurance, and the preferred method for obtaining it and the preferred method for filing a claim. So we have two things in this graph that this graph is showing us. And first is whether people want contact, meaning they do want to deal with a representative and go back and forth, or whether they're looking for the self-serve option where they're going online, they're filling out the forms, they're hitting submit, and they're not talking to anybody. The contact is highly preferred and like very strongly across the board for both for obtaining and for filing a claim that compared to the self-serve. But when you look within the contact and whether that's going to be the face-to-face in the same room or the virtual. I feel weird saying face-to-face because really a video conference is also face-to-face because you're face-to-face over the screen. But when I'm saying face-to-face, I do mean in the same room. And it's almost split equally, right? So we have in person in the branch 35, but then, or representative coming to my home 9, but then we have over the phone 25 and video conferencing 13 and email 6. So it's an almost even split between the preferred I want to walk into a branch and sit down with someone, and I want to do this in some way virtually, either over the phone or video conferencing, or to a lesser degree, email.
It's still a remarkable statistic that future purchasers, a quarter of them are comfortable doing it entirely through self-serve.
Yeah.
I mean, that's still 1 out of 4 Canadians.
Yeah, yeah. When we talked to people who had obtained CPI during the pandemic, most of them still had something in person, whether that be just part of the process, signing the paperwork, they had something. So then when we asked the methods that were used, the light blue bar at the bottom is our 2018 results. So you'll see in 2018, it was primarily through in-person at a branch, 58%. Everything else, all the other ways of doing this were quite minimal. We're seeing that split. We have 23% over the phone, 21% still in person at a branch, the whole process. So we had some that was initiated online or completed online. There's more of a mix, but we definitely didn't have that whole, we just went to a branch to get our credit protection insurance. We talked about their experience in getting credit protection insurance, and we compared that to the 2018 findings. And why we did this is we were interested in understanding if their experience had changed. So now that people were doing things differently, they were more likely to be doing them virtually or over the phone, video conferencing, whatever it was. Did that have an impact on their overall satisfaction? And honestly, satisfaction went up across the board. We tested a number of different attributes about the journey of obtaining their credit protection insurance. Overall purchase experience, 96% satisfied. So when we did this back in 2018, when I presented those results, I talked about how great those scores were, right? And they really were. They were great. The high satisfaction. It's gone even higher at this point. So overall purchase experience has gone up by 9. Responsiveness of representative has gone up by 12. Explained well by representative has gone up. Ease of purchase has pretty much stayed the same. It's been an increase of 1, but that's a great finding as well, because this is a new situation. There's been different changes, there's been different problems and that people have had to deal with not wanting to go to a branch or dealing with COVID protocols, but it didn't affect the ease of purchase. Of all of these ones, that one was one that I expected to decline, and it didn't. So that's great. That's a great finding. It just shows that the financial institutions have really stepped up and made this a seamless change. Quality of response to the questions has gone up by 10. Like it's, availability of comprehensive information to make an informed decision is up. Written in clear and easy to understand language. Value for money has gone up. So what people feel they're getting for their insurance. And even the trial period that allows me to cancel at no cost, that has satisfaction with that has gone up by 20%. So that's the biggest jump that we saw.
Sorry, I just would like to dig in a little bit more on some of these, the numbers on this page, because some of them are really quite dramatic, especially the overall purchase experience satisfaction levels. Do you have any thoughts on what might be causing such an increase? I mean, you'd think that during a pandemic, it would be more frustrating, more difficult to get the answers that you need, and that these numbers would naturally go down, but the opposite has happened. So I'm just wondering if you have any thoughts on what's going on here.
My thoughts on this is there's a few things at play, I think. One is expectations. And I think that, in the past year, everything has been more difficult, and consumers are expecting things to be more difficult. You couldn't just run out and buy cat food, for instance. That's been my main complaint. Driving me crazy. But you can't just do that anymore. Everything is a process. So the fact that these have gone up is just showing that the financial institutions have met the challenge. You know, like I'm sure the consumers went in thinking, okay, everything I do is more difficult. Everything is taking longer. Everything is more of a hassle and more concerning to me. Yet this, they did pretty good. They exceeded expectations that the consumers had, whether these expectations were set by, you know, financial institutions or financial transactions at all, or just life in general. But really, it's showing that the institutions have really stepped up and have made this a process that is not the challenge that they were expecting to have.
So shifts in processes and also investments in technology, I think, have definitely occurred to try to make it easier for the consumer. And you're saying that it worked.
Yeah, it definitely worked. Yeah, and this shows clearly that it worked. We asked people as well, we did this again in 2018 and in this study, how confident they were in the knowledge of their benefits. So that is that they know that if they make a claim, they understand what they're going to get from their claim. And again, this has gone up, and this is a good finding as well, because we weren't sure if what we were going to see is that consumers were less confident because they didn't have that sit down in the branch conversation. They had to do it in some different way. So is that going to affect how confident they are in their product? And no, it definitely does not. Job loss has gone up by 13%. Now that might be, that could be a process of people questioning it more and making sure they understood that, because it is a fear that some people were having going into this, is job loss at this point in time. Life has stayed about the same. It's gone up by 3, but disability and critical illness has gone up by 10 and 6. They're confident. And also you have to remember that the likelihood of getting this coverage has also increased. Now, granted, these were always asked by people who had the coverage, so I'm not saying that, but I'm just saying that people are more in the mindset of job loss, disability, and critical illness than they were before. And so their confidence in what they're getting from their insurance has also gone up.
Do you think partly, Leslie, just because of the preoccupation with health and with mortality, that people are just reading the documentation provided to them more carefully? Could that be part of this as well?
Yeah, I think it could be. I think it's just everyone has this, there's a worry over everyone right now, right? It's almost like the black cloud of concern. And this is one thing that I'm finding with things like when we're looking at like the job loss, people who have not been impacted by COVID in terms of their employment, people whose employment has been stable, the people who are working from home, they still have the what if concern. Everyone had it. Everyone going in is like, well, what if something happens? What if, because stuff was happening on a daily, weekly, like hourly basis. You had no idea what was going to happen next. So because of that, I do think people are taking more time to make sure they understand the coverage and the protection they have, because they do have more of this what if something happens than they had before the pandemic. Again, we asked back in 2018 and again in this time, if they talk to their financial representative about credit protection insurance when getting their mortgage or home equity line of credit, and what was discussed. So overall, talking to a representative is about the same, and what was discussed is all about the same. Like, there hasn't been a big change here. They talked about the coverage options, they talked about the premiums and the cost, the advantages of having the insurance, a way to protect, the CPI is a way to protect themselves and their family. The one that we did see a difference was that they were told about the free look or review period that was available. That has increased, whereas 44% of people remembered hearing about that in 2018. It's gone up to 60% this year. Yeah, and that is the end of my presentation. So just to recap, really, as we've said throughout, what we're really seeing is there is a shift. There is a shift to what people want, and there is a shift to how people are going to want to conduct financial transactions, the bigger financial transactions like getting loans or insurance. But it's not an absolute shift. It is not everyone's going to be moving online. No one's going to care about going into the branch. That's not the shift we're seeing. It is going to be a mix of people who are looking forward to getting back to a branch, sitting down, having that confidence of an in-person, face-to-face conversation, and the people who are going to hold on to the convenience that they see in doing this virtually.
Lesli, I just want to remind participants that if they have any questions now that the formal presentation is concluded, this would be a good time to ask them. We'd be very happy to tap into Leslie's expertise if you have anything you'd like us to explore further. Lesli, I'd like to ask you about the increase in the consumers who said that they want disability, critical illness, or job loss coverage, which were all up by 10% or more from 2018, as opposed to insurance, life insurance coverage, which actually slightly down from 2018. And do you have any thoughts as to what's going on there, and in particular, why critical illness, disability, and job loss saw a 10% or more increase in the intentions of consumers to purchase this insurance?
Yeah, I think it's as we said with the, their confidence and their knowledge about their benefits. It's the same reason why they're getting it. There's that worry. People are more concerned about what might happen. And even if nothing, even if there's no reason for the people to be concerned for specific groups, everything has changed so drastically in the last year that people are wanting to make sure they have some kind of protection. They're seeing others, if it's not themselves, they're seeing other people who are losing their jobs or losing their businesses. I think we're all wondering and feeling for people who, own restaurants or hair salons or that type of, and what are they doing? So people are really looking at more ways to have coverage. Now, when it comes to life, the life insurance has gone down a bit. It's not a significant decrease. So it's not a big finding there that it's been a decline, because it's pretty similar. But that coverage was and still is the most prevalent for the CPI coverage. However, these other things that perhaps, in 2018, what are the odds? Disability, job loss, it's fine. Whereas now people are not taking things for granted. They're not saying it's fine as much as they used to. I think you're on mute there, Keith.
Another question for you, Lesli, is in terms of technological applications, it's clear that not all technologies are equal. We see that from your research, video conferencing programs and platforms such as Zoom seem to be a big winner, and consumers seem to be quite comfortable with those platforms.
Yeah.
Digital apps from banks and insurance providers, not so much. We saw only minimal, marginal, nominal improvements in their desirability. So question for you is there any evidence that clear winner status for video conferencing versus slightly behind status for digital apps will change at all as our economy emerges from the pandemic and people are no longer told to stay at home and not travel, and they become more mobile again, or do you see this as a sort of a more ongoing change?
I feel this might be an ongoing change. As with the video conferencing, it is, as things open up, as I said, there's going to be people who are still wanting to do it that way. And there's always going to, I think moving forward, I think the days of who does a Zoom call is behind us overall. I think that is going to be more the norm than it used to be. And really, personally, we saw it with things like people doing FaceTime or whatever. We saw more of an increase in that kind of video conferencing and on a personal level, it is ramped up exponentially during the pandemic. So I do think that will continue. When we look at the apps and that type of idea, that is more of a self-serve. That's the self-serve feeling, right? So they're not dealing with someone directly, they're doing it on their own. As I said, we've seen that kind of hesitation as overall on that, on the apps, because there's just some people that worry about the security, but I do think that's going to decline. And I have done focus groups a few years ago and then focus groups this year about that for another client, but looking at mobile apps, and it is using, people are less likely to be concerned about that. So I think that the mobile app usage will probably continue. It'll probably, people will become more and more comfortable with it, but it'll always be that self-serve method. So I think moving forward, it's going to be interesting to see the video conferencing. Are the people going to continue wanting to do that video conferencing, or are those the people that might be slightly moving towards going back to a branch in the future? I don't think it's going to be soon, but perhaps. But I do think the apps will increase in their popularity as time goes on.
Leslie, we do have a question from the audience, which is based in the increases in client satisfaction with the self-serve options due to industry improvements. Is this an unexpected positive result compared to other industries?
Well, in looking at finance overall, no, I think that, the financial institutions and the financial industry has worked on this in a number of different ways, not just through, credit protection insurance or insurance and loans and the bigger. They've been working on this and people are appreciating it. So that's great. So in the financial world, no, I don't think that is unexpected. I think it's a great finding and it's definitely positive. When we look at some of the other industries, to a degree, people are moving more towards that in different industries, doing stuff online, handling their accounts online by themselves without wanting to talk to people. And that is something that we are seeing across the board as well.
Excellent. Leslie, perhaps you could close out the presentation so that we could have a bigger view of you for the next question, which comes from a participant in the webinar. And I'll just read it out. We see that some financial institutions are only sending information, confirmation of policy via email. Do you think the majority of financial institutions will follow suit and charge consumers a fee for a printed copy? If yes, how do you think consumers would react? So this gets to the whole question of a hybrid model and some institutions wanting to try to streamline their processes. So what are your thoughts on that, Leslie?
My thoughts on that are the people who still want to go into a branch are very set in their ways, right? So the people who and even the people who have moved to a more virtual method now, but once the pandemic is over, are looking forward to going back to their branch, they're going to want to do that. And I think everyone knows that if you try to charge somebody for something that they feel they should get for free or they've gotten for free before, there's going to be pushback on that. So I do think that might have pushback. I think the number of people who want the paper, will decline. And I've seen that in other industries as well, especially other financial industry sectors, is that people are less and less likely to want to have that paper copy in hand. They're more happy to have it on email. But those who are set in their ways, while they're still doing that, they're definitely going to have pushback on that.
Excellent. Thank you for that, Leslie. Leslie, I don't see any further questions from the audience, so I think we'll close it out. And I'll just ask you for your final thoughts and final summary before we conclude this webinar.
Great. Well, thanks, Keith, and thanks for inviting me to present this interesting data, because I think it's really interesting to see not only how well people are embracing the virtual changes that have happened over the past year, and how well the financial institutions have done in keeping up satisfaction and information going back and forth about this, but also just the idea that maybe it's not as absolute as we might think it would be, that maybe there are those people that are still going to want to go to the branch and have that in person.
We do have another question, Leslie, so we'll just ask that one before we close off. The question is, if only 2/3 of consumers definitely want to go back to in-branch for their transactions post-pandemic, and fully a third are definitely sold on virtual transaction methods as a permanent change for them going forward. Is that a significant enough change to cause FIs to take a hard look at their real estate footprint? I know that might be a hard question for you to answer, but I know that you do a lot of work with financial institutions and do have a sense of the pulse of the industry. So even if it's speculative, what are your thoughts on that, Lesli?
Yeah, my thoughts are that there is going to be a decline in the people who go to branch. And I think that's what we've seen in here. And you know, before we've gone from, I get credit protection insurance or insurance and loans by going to a branch, full stop. That's what I do. That's what I always do. And that's what I always will do. That's what we had back in 2018, where people didn't see a difference. People are seeing the difference now. So definitely there's going to be a decline in the number of people going in. But it's not going to end. So like a change in real estate footprint, perhaps, right? Because you're not going to, I really don't think you're going to have the same volume of people going to the branch if you're giving them other options. But, you know, shutting down everything is probably going to have some backlash as well.
Right. So it is a hybrid model.
Yeah, definitely.
Excellent. Well, I really appreciate your presentation today, Lesli. I thought it was very interesting, and we always enjoy working with you for all the insights that we learn about our customers and how to better serve them. So thank you, and thank you on behalf of CAFII to all of those of you who have attended this webinar today. And I'd like to wish you, Lesli, and everyone in the audience a great rest of your day. Thank you so much.
Thanks.
Bye-bye.
Bye.